In this video, we're going to cover breakout bars in a little more detail. And the important concept to remember is that breakout bars do not exist in isolation. They're always used in conjunction with the breakout bands to filter what would be or what is a valid buy or sell signal with a breakout bar price. Now, the first question we want to get is, what is a breakout bar? And a breakout bar, simply put, is a 5-day high or low. And this is an example of a SPY daily chart with bullish and bearish breakout bars marked by the green and red arrows. And if we do a close-up, we can see that in this first example, the green arrow, it's a bullish breakout bar because the high of the two bars immediately preceding it and the two bars immediately following it are lower. Those bars have lower highs, making this a bullish breakout bar. The bearish breakout bar is true in the converse. The lows of the breakout bar are lower than the lows of the two bars immediately preceding it and the two bars immediately following it. Now, breakout bars you can usually spot fairly easily just from eyeballing the chart. But in the campaign chart window and the 120 bar chart window, if you right click for the context menu, you get a menu item called breakout prices. And if you click that, it'll put the breakout prices going back maybe halfway through the chart of all of the bullish and bearish breakout bar prices. The bearish breakout prices are highlighted in low intensity red and the high and very low intensity green, but it makes them pretty easy to distinguish. This is a new concept that we're just introducing, and that is that a bearish signal will cancel the immediately preceding bullish signal, and a bullish signal will cancel the immediately preceding bearish signal. And we can see that occurred on this chart. The signal or trigger price created by the first green bullish breakout bar price would have been taken had there not been an intervening bearish signal, because the breakout occurred above or clear of the breakout bands. The bar that the cursor is on, the white bar, is a breakout bar. We haven't put the arrow on it, so you can just spot it by looking at it. That is a bearish breakout bar, and the signal would have been taken on the gap bar because it operated or happened clear of the breakout bands. And in a moment, we're going to introduce a new concept of variation of the breakout bands. But first, let's just review what is a breakout bar, or more importantly, a breakout bar price. And a breakout bar price is a signal or trigger price. A subsequent price move above a valid bullish breakout bar price is a bullish swing entry trade trigger, and a price move below a valid bearish breakout bar price is a bearish swing entry trade trigger. Again, if we use them in conjunction with the breakout bands. So the whole purpose of the breakout bars is to establish a signal price. And a breakout bar high-low, excuse me, is the price above or below which a valid buy signal will occur. And the breakout bar price must be above below the breakout band, and this is what we're introducing, this variation. The breakout bar price must be above or below the breakout band red line to be valid. And in the basics video, we talked only about being clear of the breakout bands. But an acceptable variation that will increase the number of possible trades without dramatically increasing the risk profile is to use the red line as being clear, above the red line being clear bullish, and below the red line being clear bearish for the breakout bands. In future videos, we'll talk about some advanced filtering, or using positioning, i.e. the number of shares that you trade in any one transaction, and how you can position using trend and oscillators in conjunction with the valid buy and sell signals.